Hello and welcome to this first video of this year. Happy New Year's to all you guys out there trading. This is Nuruddin Al-Hamouri, and this is the first video of this year in coordination with also Orbex. And today it will be like kind of a short video discussing what basically happened for the past few days in the market, and to talk about a little bit about what's coming up next in the next few days until the end of the week, and what exactly I'm looking for the next few days. But beginning with the fundamentals, which is basically my favorite, and you can also go into Orbex website, and you can go to online trading tools and all the way to economic calendars to get your economic calendar, or to get to the economic calendar. So basically, or start with this week has been a little bit with lack of fundamentals since the beginning of the week, with no significant economic releases. We had some economic releases on Monday, also today a little bit, not that much, but mostly will be the Swiss unemployment rate, which was unchanged, also a 3.3% unchanged. Also, we had from China, which was also one of the important numbers. The PPI spiked to highest, or the biggest increase since 2011, and this is what kind of a huge impact, also a huge increase in the PPI, which is expected to have a notable influence on the People's Bank of China in the next few months. And also, inflation is likely to start to pick up, despite the fact that we slowed down a little bit in the past few in December. In addition to that, also the US dollar also continued to decline all the way back. Of the US dollar index is right now trading below 102 due to many factors. There's still what do we call it, the positioning period in the market, which is in January, and also the continuous rally in the US equities. In addition to that, the economic releases today didn't even help the US dollar that much. But don't forget that we have this week, we have the a press conference for the new president-elect Donald Trump, and also in addition to that, we have also the Fed Chair Janet.11 will be speaking in the next few days, or especially on Friday. But again, going into the fundamentals, the wholesale inventories in the U.S. increased again by 1%, which is also a little bit higher than expected. But when inventories increase, basically the sales, this means that the sales is going down. But in the next few days, which we're talking about tomorrow or Wednesday, we'll be looking for some of the economic releases, especially during the European session. We'll be looking some of the manufacturing productions and the industrial production in the UK, which set to have a notable impact on the market, in addition to the trade balance also. But the most important thing here is that you need to follow the year-over-year in these figures more than the month-over-month. In addition to that, don't forget that these data are expected to be positive, despite that the British pound are likely to be one of the weakest currencies for this year, and also one of the weakest currencies for this week, due to the continuous remarks by the Europeans and the UK, accusing each other over the Brexit. In addition to that, don't forget that we have some inflation figures tomorrow from also some of the European countries, which is very important also to note out here, that for the past few weeks we had a notable rise in inflation data almost across Europe. Also in the US, we had an uptick in inflation, CPI and core CPI, and also in Asia. This is basically one of the reasons why also gold and metals are gaining some momentum. Going forward also to Thursday, which will be also the most important. Also, Donald Trump. I forgot to point out here that Donald Trump press conference and news conference will be tomorrow at around 16 at night Abu Dhabi time, which is going to be very important and might also influence the market, especially if he start also talking about the fiscal stimulus that he's willing to implement. Thursday is the most important, one of the most important days, because we'll be waiting also for the final inflation data also in some of the European countries. Also, we have the jobless claims in the US. The ECB monetary policy meeting accounts, which basically doesn't matter anymore, at least after the ECB decided to say that they will start also tapering by or in April. In addition to that, we'll be waiting for the U.S. initial jobless claims and the trade balance for the exports in the export price index and the import price index in the U.S. Also, for oil traders, we'll be waiting for the natural gas storage, in addition also to the U.S. crude oil inventories. Going forward, the final day of the day, which is Friday, we'll be waiting during the Asian session some of the most important data for China, which is export, imports, and the trade balance. Estimates are not quite actually very good for this month, despite the fact that the CNH or the Chinese yuan is at almost record lows against the US dollar. But one of the important days also, or one of the important events, is the Fed Janet Yellen speech on that day, which is very important because we might see some or additional information about the Federal Reserve policy in the next few months, or at least for this year, or if they are still expecting another 2 or 3 rate hikes, as they say. Never mind, we go forward also on Friday. We have the U.S. figures, which will be also one of the important figures for this week or until the end of the week. Retail sales expected to rise significantly by 0.7%. I don't think so. That will be better than expected because of the stronger dollar in the past few weeks. In addition to that, we'll be waiting for the producer price index, which is also another important figure, which is expected to rise by 1.6. And always make sure that you look at the year over year more than the month over month, which basically the Federal Reserve will be following, because it's one of the major indices for inflation. And the core, of course, is much more important than the PPI or the CPI, but the core PPI is always also important. At the end, we will be waiting also for the Michigan Consumer Sentiment Index, which is expected also to rise again to 98.5 compared to 98.2. So these are the rest of the data that we're waiting for the next few days. And now let's go into onto the technical part of the story, or the technical part of this video. Looking at the euro. Since the beginning of the year, we've been trading within some sort of a tight range. But the most important thing that you need to know here, that the euro managed to stabilize well above 103.80 support area, which is very important for the time being, despite the fact that we broke through the 104 and the 105. Yet there is a very important level here that we are pointing to a little bit of a slight rise. However, 106 is very important to watch out. We have to see kind of a breakout above that resistance in order to be sure for another breakout higher, all the way to 106.35. But for the time being, I'll be watching until the end of the week. Going forward to the Japanese yen. The Japanese yen actually showed a very interesting move for the past few months, or for the past few weeks. At the end, we couldn't even break above the 118.66, the one that I pointed out in our previous videos. Here, the 74.4 Fibonacci retracement, which stand around that area, but it's still at the same time we haven't broke above that resistance, which should be what's very. It's going to take some time until it develops. But for the time being, I will still be interested to see the reaction when the Dorian tests, or if it tests the 114.71, because it's a 100-week moving average, which is very important, because after the breakout above those moving averages, the outlook has been very bullish. But at the same time, you have to make sure also be aware that the technical indicators are slightly negative right now after this bullish move, which basically shows a possibility for a deeper retracement to the downside more than the upside. The British pound is one of the weakest, or is basically one of the weakest currencies since the beginning of this year, and this is again because of the continuous uncertainty about the Brexit. The European are accusing the UK about the Brexit, and also the UK is kind of trying to go around it with another another round of negotiation, which still hasn't started even yet, but the way that they're kind of for the time being, the British pound for me, it's still bearish on most of the time frames and still bearish on at the year. But for the time being, I would be interested to see if we will be testing the 122.80, which I don't think so, that we'll be breaking above that resistance. Therefore, shorts here, I will be interested to start shorting again, like for another leg lower toward maybe 121 or 120.70. Onto the gold prices. Gold had also another good beginning of the year, let's say. But the most important thing that you need to know here that we held above the 11,828 support area, which is very important. And at the same time, one of the things why gold is still positive is because of the inflation data that has been announced recently across the board. U.S., Canada, even Europe, Asia. There's a lot of inflation. A lot of inflation pressure, and a lot of inflation signs, which is very important now. And this is basically what's giving the gold and metals in general some boost on most of the some boost in the past few days, or at least since the beginning of this year. However, I need to see at least a break above 1194 in order to be sure that the trend is back up again, or at least to see another breakout all the way above 1200, or to test the $1,200. Finally, we'll be looking at the U.S. Equities, which is, I'm not a fan of them right now, especially that the Dow Jones Industrial Average has been struggling to get toward 2,000 or to 20,000 points. However, we already almost touched it at 1998. However, I still not a fan of the U.S. equities right now, especially after the move that we've seen after the elections and the continuous rally in the US dollar, continuous rally in the equities, and also continuous rally in the 10-year yields. This is not healthy for the markets, at least for the time being. So we need to see some sort of a retracement before going into any kind of trade for the US equities, whether for S&P 500 or even Dow Jones. S&P 500 also continued to trade at record highs for the past 4 sessions, but still, again, it's very high. I don't recommend buying at these levels at all. I'll be still be interested to see some sort of, at least for a retracing to the downside before going into any kind of trades at the same time. Technical indicators are very bullish and also heavily overbought, so we need to see some sort of a retracement to the downside in the next few weeks. So this is it for this short video update for this week. We will again renew the videos starting next week. You'll find it on YouTube or on Orbex website on Monday as usual. In addition to that, the new articles will be starting as early as next week with new information and better data and better information that you can use it in your trading. Follow us on our social media sites also for Orbex, and also you can get all of the articles on time by visiting orbex.com. This is it for today. Thank you for listening. Thank you for watching. I'll see you once again next week. Happy New Year.